individual insurance open enrollment begins November 1, and here to talk with me about this is Jae Oh, author of Maximize Your Medicare. Jay, welcome.
Thanks for having me, Bob.
Pleasure. So, what do folks need to know about the individual insurance open enrollment period beginning?
Well, time flies when you're having fun, Bob, and we're here already. November 1st is the first day that you can select a plan for 2023. Now, you can go and preview the plans on healthcare.gov or your state-specific site. They should have the information about all the plans as well as premiums, benefits there on the websites now. In addition to that, the Inflation Reduction Act, something that we've discussed between the two of us, that has extended the advanced premium tax credit, which lowers your ongoing premium and in certain cases can lower your deductible and out-of-pocket maximum. You do need to use the federal portal, healthcare.gov, or if your state has its own, then you need to use the portal in order to capture the lower premiums and the extra benefits. A very important point.
Any big changes that you're aware of with regard to coverage or networks or premiums?
There are going to be a large number of subtle changes. While each individual change may not seem be significant, when added in total, some fairly notable things. First of all, we're going to see more carriers per location. And I would simply describe it as the sellers, the carriers, the insurance companies becoming more used to the usage and the statistics necessary in order to be competitive. So as a result, we are actually seeing, especially the large national carriers, entering certain locations where they have been absent in the past, for the past 10 years in certain instances. That all said, that inflation, which has run throughout, coursed through all of the US economy, has affected healthcare costs. And we're seeing statistics about 10% higher for healthcare costs. Alongside that, you can anticipate higher health insurance premiums pretty much across the board, somewhere in this high single digit to low double digits as far as a year-over-year increase in premium. For some people, large families, for example, with multiple children, 10% is a great deal of money, therefore encouraging the idea that you'll want to refresh your plans to make sure that that plan fits your budget as well as your healthcare access needs.
Yeah. And for folks who may be accessing the insurance market for the first time, they'll need to be aware of the advanced premium tax credit that would be available potentially.
It's the biggest opportunity that people have to save money that I could name. It is easily glossed over. People when they think about financial topics, they're thinking about financial markets and the stock market and the bond market and things like that. But the reality is the advanced premium tax credit can be enormous for many. $1,000 a month of savings can be had. So you could certainly see that's the case almost irrespective of your net worth. That's a tremendous amount of money, and money that could be saved if you simply understand how the advanced premium tax credit works and how the Affordable Care Act works.
All right, Jay, we've covered a lot of ground. Anything we missed?
No, I think that that's it for today, Bob. I just would say that part of the things that we do at GH2 Benefits is to help people navigate. There's a free quoting tool. I'll give you the link that you can put in articles below the video. It gives you a good idea, an estimate, a good starting point in terms of what the market will bear in your location. That all said, of course, I'm going to be biased, but the fact of the matter is crossing the finish line is very different in practical terms than just simply having the ballpark. I have an idea of how much a car costs, but actually selecting the car and the trim and the details, probably a good idea to have some guidance there.
Jay, as always, it's a pleasure having you share your knowledge and wisdom with us. Much appreciated.
Thanks for having me, Bob.